on your screens there, the macroeconomic data. April CPI has come in at 2.92% versus an ET Now poll of 2.9%. We're still waiting for the internals, but let's quickly go across to our consulting editor, Maithili Busnurmat, to help us understand what these numbers really mean. Maithili, we were expecting 2.9%, but so far the April CPI has come in at 2.92%, inching up slightly. How should one really be looking at these numbers?
Well, with perhaps a little bit of dismay, because though we had wanted to go in for inflation targeting and a bit to get inflation under control, I think we've had a bit of too much of success, as a result of which we're seeing CPI way below the midpoint of 4% that the RBI was targeting, under inflation targeting. The only good news, if you can call it that, because between 2.86 and 2.92 there's hardly any difference, is that the CPI is inching up a little bit. It's gone up to 2.92, and hopefully food inflation would also have gone up as compared to the previous month, because right now, remember, the problem that we are facing is too low farm prices rather than too high. So from a situation where we had too high inflation, now we're struggling with the other extreme, too low inflation, and as a result, farm distress, Ruchi. Not very happy news. Of course, you can say, yes, it's good that it hasn't shot up, but 2.92 when your midpoint is 4% is not very wonderful either.
Absolutely. In fact, April CPI food inflation at 1.1% as against 0.30% in the month of March. Let me take it across to Madan Sabnavis. Madan, on Friday we did see the factory output, the lowest, in fact contracting, and the lowest reading that we've seen in the last 2 years, and now inflation also inching upwards. How should the RBI really be looking at this number, given food price inflation has seen a mild uptick, about 1.1% as against 0.30% in the month of March?
No, in fact, I would tend to think that the Reserve Bank will probably pause this time, because while both the numbers are definitely not looking very positive, but if you look at the conditions which have led to lower industrial production, to my mind, it's more on account of demand conditions. And if we're looking in terms of inflation going up marginally this particular month, it's again on account of certain supply factors. I'm not quite sure what the breakup of the CPI inflation numbers are, but I think there would have been a movement, I'm sure, in the food prices moving slightly upwards, the fuel prices moving slightly upwards. So I don't think this is reducing interest rates at this particular point of time will really help to bring in more investment. I think you will have to wait and watch, see what the new government has in terms of the regular budget, what exactly are the allocations, what are the actually kind of policy framework which has been put down before trying to support it by lowering interest rates. So right now I don't think the situation is alarming. I think growth has definitely been lackluster for the last few months in terms of industrial growth, industrial production. So I think that kind of a status quo continues. Inflation, to my mind, will continue moving gradually upwards. I think even the RBI is really looking at a number going towards the 4% mark in the second half of the year. But I don't think it's going to be worrisome as yet, because we don't really expect any kind of an external shock like oil prices shooting up to any significant extent to really keep affecting inflation. So I think we'll be well within this 3.5–4% range for the greater part of the year.